This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil with Invest Like a Pro. So today, normally on Fridays, I give a market update, and I am going to do that, but I'm doing it a little bit differently this week. I'm going to start out with a specific actually two specific trade setups in the spider that took place. And then I'm going to do the analysis after that. I've got kind of a time crunch this afternoon. So I'm doing the trading portion earlier in the day. And then when the market closes, I'm going to do the analysis. Now, one of the things I want to mention is that I love doing there's two different aspects to what I'm trying to teach on this channel. One is the analysis side. I mean, we want to improve how we interpret the indicators, how we interpret price, how we interpret volume, how all these can work together in multiple time frames. But trading is a different story. We have to kind of divorce ourselves from all the analysis and try and keep it as simple as possible when you're trading. So I want to show you some of the patterns that I have developed or brought up both in the book and in these videos that show up and repeat over and over again. They can be applied in all time frames. Right now, there's just a lot of great setups taking place anywhere from daily, hourly, 10 minute, 2 minute. So I'm going to give a few examples of those first, and then we'll do the analysis after the market closes. And then I'll post this up on Friday morning. Now, the other thing I want to mention is next week I'm going to be out in Washington, Redmond, Washington, at Stock Charts TV's home office there. We're doing the ChartCon conference, which is a virtual conference. I'm doing a sector review of technology as part of that, and I'm also going to be in a bull-bear debate. So I just wanted to bring that up because next Friday, I'm not sure that I'll be able to do an update of the market. I will have a video. There will be a video posted, but it might not be what I typically do on Fridays, which is that market review. I'm going to see what I can come up with. Maybe I'll do the review earlier in the week. I'm not sure. I'll have to figure it out. But there will be a video up there on Friday, and it'll be, hopefully, I'll be able to, maybe it'll be more of a trading video rather than an analysis video. But again, it all kind of works together in understanding. So let's go ahead and get going here. I want to show you this. There's two different trading setups that I want to point to. The first was, as we were dropping down, during the course, before we got this rally, we had a divergence take place here where the MACD made a higher low, and we had these lines pinching together. Do you see how the DI lines are this is making a lower high and this is making a higher low? So we know we're starting to form some kind of a contraction. We get confirmation when we make a higher low and a higher high here and a lower high and a lower low here. So right about there, we get confirmation. But even before that, as this was dropping, we did have a little idea that there was some divergence. Now, all it did was rally back up. And a lot of times in divergences, that's all you're going to get is a little minor rally. And that's basically all that took place. But then look at what happened. We get a second layer of divergence, and this one I like better. And here's the reason. We have this pinch develop while this goes to a new low. So this is not only a divergence, it's also a pinch play. I call it a divergent pinch play. And when that happens, I like to go down here on a 10-minute chart. So that's a 10-minute. So that's taking place. So this decline, as this is at new lows, is taking place right here. Now, what I want to show you, there's a couple of things that are really cool about what took place here. We went to a new low, we had divergence, we had a divergent pinch play, but this is a pinch play. All right, that's pinching while this is pulling back. Now, if we go and look at what took place on this time frame, we broke the downtrend line, and then we came back and tested the 18, and it happened below these lows. Okay, so we essentially had a undercut, and then we rallied back up and tested the 18. So coming back up through here would have been just a fantastic trade, and it was a 2 time frame pinch as well. Do you see? Hopefully you can see that. Now, when I do a trade like this, I'm looking at this as a pinch, and I'm looking at this as a move back up into this resistance. All right. I'm not looking for a move. Now, it ended up exceeding that somewhat, but I'm not looking to play that. I would be playing a move here with a stop here and a move back up in there, which is plenty of risk reward to take that trade. Now, the reason why I didn't actually take the trade, I was watching this at 3:30 and I was sitting there thinking, man, if this turns up quickly, I'm going to get this as this is coming back up through here. The problem was it took a long time and there was only like 10 minutes left when it finally triggered. And I'm not doing a 10-minute trade with 10 minutes left in the day. It's just not going to happen because I don't want to take 10-minute risk. I don't want to take overnight risk on a 10-minute trade. All right. So I won't do that trade this late in the day. If this would have happened at 3 o'clock, I would have definitely taken this trade. All right. This is a undercut and rally. It's a 2-time frame pinch play. We got divergent pinch play on the hourly. I mean, a lot of things piling up here. So hopefully, I'm curious to hear. I'd love to get some feedback if anyone was watching this and noticed this 2-time frame pinch and the undercut and rally. The undercut and rally really strengthens the pattern when you break down and then come back above. So by the time it triggered, it was back above these lows. Really nice pattern to be on the lookout for. All right, I'm going to switch this to a 10-minute. And I'm going to move this to a 2-minute because I want to show you really what is the epitome of what I teach in my book. All right. Now we get after that here. So here's the pinch, the 2-time frame pinch, and the next day it triggers and it moves up, and then it finally gives us a pullback play. Okay, we've got an 18 and a 40 rising. We've got confirmation on a MACD basis, confirmation on an ADX basis, and we get our pullback. Now, because this overran like this, I was really expecting this to come up and then come back down. You see how I always talk about if that happens, I look for a retest, and it did that. So if we notice what happened here, it went into the zone. So this rally here was this rallying into the zone and then coming back out of the zone right here. All right. Now we have this overrun, but we have a lot of strength. So I want to play this. I do want to play this to the upside. Now, when this triggered right here, after coming back down and testing, I had my finger on the button. I was going to do this for a really quick, nice little 10-minute, 2-minute trade. I got a phone call from a client and I couldn't put on the trade. So that's the problem I've got. And the reason why, for the most part, I really don't intraday trade. I get institutional clients calling all the time. I'm seeing this happen, but then I got to go through for 20 to 30 minutes, a lot of times going through stocks that they're interested in. Now, the one thing I'll tell you is, so this was one trigger for sure because we went in the zone and came out and then came back up through and closed above the 40. We had the test after the overrun. We're showing no strength in the sellers. If you want to be a little bit more conservative, you'd wait for the green DI to confirm. Now, green DI came up, tested 25, and then came back up through here. On this green bar, coming back up through here, you could have done this trade. All right. Now, the aggressive way to play that is to put a stop right here. You're buying it here and you're putting a stop right here. I mean, that's a 2-minute bar. I mean, that's a tight stop. The more conservative way would be, take that trade and put the stop here. Now, if I do this trade right here, I'm going to put the stop here. Once this turns up and tests this high, I probably come back to here. And then once this gets going to the upside, you could come down underneath here. But the thing is that you do want to be scaling and trailing even on an intraday basis. You get a big bar like this. As I've been saying, take some profits. We had confirmation here on a DI basis. Then it pulls back. And then once this goes to a new high, DI is not confirming. So I'm going bar by bar. I would have been stopped out on this little mini bar right here. Yeah, it went up a little bit more after that. But what a great trade. If I'm in here or here, it's still a great trade to the upside in a very short period of time. I mean, that was about a half hour at the most. All right. So these are two really good trades that reflect a lot of what I try and teach on this channel. Keep your eyes on undercut and rallies when the higher time frame is divergence. All right. I'll repeat that. When the higher time frame is divergence, look for your undercut and rally patterns. And the reason why is because it's telling you there's a very minimal downside move taking place, and then we're getting that undercut and rally, especially if you get a pinch play developing. All right, now that's the first part of this video. It is based on the trading side. I'm going to do the analysis starting with the monthly and looking at the momentum characteristics and the trend, and going through all that all the way down to the hourly as well. Okay, I've got my 4 charts up. Market's just about to close, about a couple minutes left. But I'm going to start with the bigger time frames, and it won't have any effect on that. And by the time we get to the daily and the hourly, it'll have closed. So let's start with the monthly. And I did throw the zigzag up. I actually did this for my Stock Talk show that I put out today on Thursday. Well, it comes out on Thursdays. You can find it on YouTube, Stock Talk with Joe Rabil. And I threw it on here. I like the zigzag because there's a couple of things. I like to compare tops and bottoms that are definitive. I don't like to just pick them out out of thin air. I want to know where a definitive level is, and I like to be consistent with them. So one of the things I'm looking at is this low compared to this low. All right, it's a significantly higher bottom. And MACD, I think as we get through this month, I think this line is going to come down and be below that. All right, so that sets up the first opportunity for reverse divergence. That's not an automatic buy, especially when we're talking about a monthly chart, but it would be the first sign where I could say there's something bullish potentially developing on the monthly MACD. In terms of the ADX, it's just there's too much lag. I mean, we've had a pretty big drop, and DI hasn't even gotten above 25. Clearly, the buyers have dried up here. I mean, they're pretty weak, but we don't really have any strong trend. It's a retracement after a strong move. So we had a good move to the upside that was confirmed by ADX, and then we have a retracement here that really is just showing that we're in a consolidation pattern. Now, the fact that we've failed at the 18-month line and that's starting to roll over, obviously there's some risk here. In a monthly time frame, you can see there's a lot of risk to the trend line. So I think there's price support coming in before that. So I'm not saying we're going to come all the way down to that level, but it sort of shows how much air there is between you and support. Let's go ahead and switch this to the weekly. And actually, no, I'm not going to do that. I'm going to switch it this way. So let's look at I have each trend line for each time frame. So on this one, we can see that not only are we not in an uptrend, but we took out this low by going to a lower low and then rallied up, made a lower high, lower low, lower high, and now it's just barely, I wouldn't really even consider that a lower low, but we are confirmed in a bear trend. So if that's the case, we need more evidence of a reversal on this time frame. Now, I want to spend a few minutes on the MACD because you can see that we just failed at the 0 line. So this was a pinch play at the 0 line. And then it looked like we could set up a potential pinch play at the 18 when this was turning. But look at what happened. It gapped. It really had a gap up for the week and then had a hard down week. And after that week, I said, anything below this level, which is 4,000 in the S&P, is a no buy zone. I mean, you don't need to fight when you have all these moving averages declining, but we can see that we're below this trend line. We've got a trend in place to the downside. We've got MACD that's back going down after failing at the 0 line. There's one glimpse of hope here, and that is, let me just show you this. So I want to draw this. Oops. Let me draw in our fib grid. So if I put the fib grid up, I know around 35, it's 3,500 in the S&P or around 350 in the spider. And then there's price support around 3,400. I would consider this high here. So let me just put this in. So right in here is support. It's right around 3,400. Okay, so somewhere in that zone between 34 and 3,500 seems to make sense to me. Now, here's where I say we could have a glimpse of hope. If we drop down and we flip over into a new month and the monthly chart shows that potential reverse divergence, this could actually show a standard divergence because we could go to a lower low here, and this most likely is not going to go to a new low quickly. I think we would have to drop pretty significantly for this MACD to confirm. All right. Now, this is not something to get too excited about unless we see a big form of climax. Like if we get huge volume and maybe even it overshoots a little bit and then comes back and there's massive, massive volume shows up, then we could maybe get a little bit more interested. But playing this divergence, you got to be really careful. And the reason is that this ADX is so strong because we had a strong reading to the ups on the downside move. And then on the retracement, it didn't even get below. You see how the ADX stayed above 25? So the sellers are still very strong here. The difference, so look at this, 33 is red DI, 14 is green DI. I mean, that's 15-point difference between the two. That's a significant difference. So we could come down, we could get a pretty good rally off of this, something that could be played potentially if we come into this 34 to 3,500 zone. And again, so I will mention this, the sentiment number is now at -9. More bears than bulls. There's 9% more bears than bulls now. We were at about 1%, and in 1 week we dropped 8%. We got a lot of people kind of capitulating, or at least calling for a correction, or basically turning from bullish to either bearish or correction camp in 1 week. That's a pretty fast drop, and it could set up the potential for some kind of a retracement rally. Now, if I'm a long-term investor, I don't really want to mess with anything on the south side of this trend line, okay? I definitely don't want to do anything below the 4,000 mark. The only way that I'd be willing to do that is if we get a really big climax. I mean, we'd have to have a big, huge climatic, massive volume, big reversal, something like that, where we could look for signs of a turn or something that isn't evident right now. So as I've been saying, you'll usually make a low on a climax or a momentum divergence. Right now, we could be setting up for a momentum divergence if this comes down as I described, and this makes a higher low. So that's something we want to be on the lookout for. Now, if we go to the daily chart, look at what's going on here. We just made a lower high and a lower low. We have a trend line on here. So let's just look at all 4 time frames. I'm going to clear this off for a second. So we know the 18-month is rolled. We know we've got some support though coming down here, 340, 350. And we know this trend is down. But if I'm going to take a trade on a reversal, it's going to have to show up on one of these 2 time frames, right? So if I look at the daily chart, we've got a downtrend in place here, and we're testing this low. Now, the reason why I think there's a potential for a rally before we go down is because we're pretty stretched from the 18. Normally, when you break down from an oversold condition, you get a little bit of a rally first. The other reason is if you look at MACD right now, we're down into this oversold region, okay? Once again, why would I say it's just a rally and not the potential for a big reversal? And the reason is this. All right, now here's the one thing I want to make sure it's clear. This ADX is rising. So I would not necessarily be looking for a move all the way to the 18 if this continues to rise. You notice how red DI confirmed this last move? So if that's the case, meaning we don't have any DI divergence and this line is still rising, then we should expect maybe a little retracement, maybe like the halfway point between here and the 18, but not all the way, as long as this is rising. Now, if this line were to roll over early next week, then you could be looking for a better rally to develop. But again, I'd be very cautious because we have momentum confirmation on these time frames, on both the 2 time frames that are really important right now, the weekly and the daily. Now, I want to point out the hourly because we had a pattern that developed back here where we broke the trend line, we tested, and then came back up through here, okay? So you could construe that as a 1, 2, 3 change in trend, and I would call it that. Now, as I've said many times, a 1, 2, 3 change in trend is really is not confirmed. It's not a confirmed change. I call it presumptive evidence, but you really need one more higher low and one more higher high to confirm the trend change. Now, the times where I don't need that is when I'm with the trend. All right. Now, in other words, let's say this is a 1, 2, 3 developing in the time frame above me, which is the daily, is in an uptrend. Well, then I only need this. I only need presumptive evidence because I already know the trend is up on the bigger time frame. But the bigger time frame in this case is down. I mean, we have an 18 that's down this way and a trend that's down this way. Okay, so we need more evidence of a turn. We need another higher high, another higher low, and another higher high. The same thing's going to hold true here. When we've got an 18 MA like this, and we have a trend line. Well, I can even draw the trend line right now. So we have a trend line like this. So let's just say we turn up. Now this is the daily trend line. So let's just say we turn up and turn this into a 1, 2, 3 going back up. Okay, well, what does that mean? Well, we have room up to here unless we can turn this up, turn here, and do that again. And if we do that, we're probably going to see green DI cause a move to the upside in ADX that's a little bit more legitimate than what we've been seeing. So this is more of a legitimate turn because we get confirmation with the ADX going up based on the buyers. All right. We really haven't had that in this move yet. This was pretty close, but it was so abrupt on the pullback. We never had confirmation, but I really want to see that extra higher low and higher high when you're below the next time frame's trend line and or 18 MA. So I hope that makes sense to you because that is really critical right now. And I would throw on, if you whatever program you have, if they have a zigzag, I would throw it on there. I would keep yourself straight. Don't make up anything. Follow the rules that I've given you. And we can get our 1, 2, 3, maybe get a little trading move, but know that the next time frame is lingering right now. And until we can get something going that's more climatic to the downside, I think you got to be really careful. All right, that's the update. I'll see you next time. Go ahead and let me know if you have any questions or comments. Thanks.